Matt, how are you, sir?
Good. How are you, Ryan?
I am doing great. And I was just telling you that I'm very excited to just chat with you because I met you. I can't remember which rodeo it was.
Do you remember what hotel it was at?
Oh, crap. No, actually. Yeah. That's really funny.
Rodeo always moves around. So if you know which hotel it's at, I can probably figure out the year.
Oh, my gosh, I don't. But I was just saying, like, I have just really enjoyed watching you / reading the stuff that you've been putting out over the years. And you posted a post in Rhodium Weekend about being an entrepreneur. And honestly, like I wanted to start there, Matt, because you wrote this really awesome blog page about kind of your journey, but I just wanted to hear from your thoughts. Like, what does it mean to you to be an entrepreneur, and like, what's it all for, man? Just jump right in, right?
Yeah. I've been doing this stuff a long time. I've been making money on the internet since the early 90s. So I've kind of seen all the trends come and go, and seen people make lots of money, lose lots of money. I've been around the track several times, and I've seen some people do it really well. I've seen other people in business really kind of screw things up and do, make a bunch of money, but then they screw up their kids or screw up their marriage. And, I've really tried to be intentional about a lot of those things in terms of like, I'm going to be at home at 5 o'clock today, and I'm going to be playing with my kids and giving them a bath and putting them to bed. And skipping the conference thing that I could have gone to tonight, just because, you really got to think, priorities and like, 10 years from now, what am I going to be glad that I did tonight? And there's a lot of stuff you could go to, but, nobody, I think, regrets spending a lot of time with their kids when they're little. So I try to keep some of these things in perspective in ways that maybe some people forget.
How did you figure that out?
I don't know. So when my kid was born, in 2012, I had a day job doing web design. I was a full-time student at a seminary, believe it or not, and I had my business on the side. And then all of a sudden, I have a kid that's born, and oh, by the way, the kid weighs 3 pounds, is 10 weeks early, and is going to be in the NICU for 3 months. So good luck making that work. And I thought, well, I need to figure out like what's going to get dropped, because not all the stuff's going to get done. And that's kind of when I quit my day job to go pursue my business full time and finish seminary and, be a dad to my kid. And, kind of ever since then, I've just been very conscientious of time and how it gets spent, and, not wasting it on stuff that doesn't matter.
Was it true? I mean, my daughter's been in the NICU for a little while too. So like, I mean, that's definitely something that can rock your world to kind of put things in perspective. Do you think there's like a huge percentage of it that was related to that situation? Was there anything in your upbringing? And the reason that for the question, Matt, is, for hundreds of people who've been on this show, I mean, sometimes it takes people selling the company and not having an identity or rock bottom or whatever it is, like to really go, okay, now I get it.
Yeah. Well, I mean, my dad was a police officer for 30 years, and he worked strange hours. So I would come home from school and he's sleeping, or like I'd go to bed and he's like, going to work now, see you later. And, so he just wasn't around, he was obviously, doing a great job providing for our family, but, he wasn't there when I was there as much as, I would like. So I thought, and I have kids, I'm going to try to keep a normal schedule so that when they come home from school, hour or two later, dad's home until bedtime, and try to do that as, I can't do it 100% of the time because, life's busy and stuff comes up, but, I try to make the default that I'm there for the kids.
I just mad respect, man. And so let's give the audience a little bit of a flavor of what you've built over the last decade or plus, because it's pretty impressive in some of the questions that you can kind of give the flyby. And then I've got some questions as far as like kind of what's kept you grounded along this path.
Yeah. So the business that I run today is called MarketBeat. It's a financial media business. We're very advertising driven. So we have an email list of about 3.4 million people that get our newsletter every day. We send a couple emails a day. So, sending 7 to 10 million emails a day is not uncommon. And we've kind of built that over the last 10 years. We have a big kind of set of advertisers that come back to us month after month. So we don't have to do a whole lot of ad sales. We do have a subscription product that needs some work. It just hasn't kept up with it because like our subscription revenue has kind of gone up slowly to the right, but our advertising revenue has skyrocketed. So that's kind of become the focus for us. So I think we're going to continue to streamline our subscription stuff because it's now maybe 10% of revenue and it used to be 30 or 40%.
Oh, wow.
Because it just hasn't grown at the same rate, which is fine. But I've been doing this thing for, I think the first kind of investing content I produced on the internet was maybe 2009. So great.
Where did you get started, man? Like where was the personal finance passion? Because there's so many, like, as I was trying to think about the ways we could go with this conversation, man, I'm going to try and rein myself in for the listener's sake. But like, you built a business, like a truly sustainable business over the years, but also your passion for personal finance. I'm curious how those two, correlated.
Yeah. I mean, it really started. So this, that story kind of began when I was a college student and didn't have any money and needed to figure out how to find $2,000 to pay my tuition bill that I didn't have. And because I worked at a gas station during the summer and I did okay, like made $7 an hour doing that. It was fun. Not really easy job, but then I moved to college and couldn't do that job there. So then I ended up working at McDonald's, also making $7 an hour. But that job wasn't very fun. I was like, I got to come up with a new plan because I was racking up student loan debt, didn't have any money, could barely pay tuition. And I was like, this is not working. I got to do something else. And I thought about, I could just go get more private student loans, and that seems to be what people did. And no, there's got to be a better path than that. So the way it started, I kind of had an interest in personal finance. I was kind of doing the Dave Ramsey stuff, the Clark Howard stuff, and that got me interested, and that provided me an opportunity to do some freelance writing for personal finance on different websites. And, that led to a personal finance blog that led to 5 personal finance blogs, one of which happened to be an investing blog that blew up and now makes $25 million a year. So
you're very gracious to yourself, my friend. And we'll unpack that. And because I find it super interesting, some of the inflection points that you had along the way. And one thing that I find super fascinating, Matt, is the industry space that, the industry of, e-commerce, blogs, the whole space, the online space. When I met you, I was just getting kind of exposed to it because I came from the traditional business space. What I find very fascinating is that you've built an omni-channel business off of this, where there's so many people that took the quick hit. I mean, there's no fault of their own, but the businesses, whether it's a blog or e-commerce, FBA site or something like that, it was quick money and then sell it, where there's someone else was really sitting there waiting to acquire it.
Yeah.
I mean, did you have times as you were making these decisions of what to do with the business where there was an opportunity to just cash out like that, but you decided to stay the track?
Yeah. I actually tried to sell the business in 2016. My daughter was born and she had her own medical issues, and shit was not going well for our family. And I thought, well, maybe I should sell this and take some time off and do something else. I did get a couple offers, but 2.5, 3 times the revenue or earnings. Actually, I think the best offer was 2.6 times EBITDA. It was one of our, I won't say which one, but one of the brokers had it listed. And, the offer frankly wasn't exciting. And, the buyers thought the risk, but, at the time the site had gotten a ton of traffic from Google News, which it doesn't anymore, and that's fine. But they saw that as a risk, and nobody wanted to pay 4 or 5 times EBITDA for it at the time. So business never sold, and I just kept running it. And it really, once kind of family stuff settled down and kind of got normalized again, found some new growth opportunities, and the business really took off. And especially during COVID, we were doing $7 million a year pre-COVID in 2019. Now it's 25 plus. So.
Yeah. That's how fast that growth happened. Holy crap, man. Wow. That's it. What was some of the, just on that particular part, was there any interesting cracks from operations that you saw with that kind of growth?
Yeah, we definitely had to scale up. So we went from 5 to 14 people, which, for the revenue we do is, a very lean ship, and that's awesome.
Yes.
But, stuff definitely broke along the way. A lot of stuff broke. First thing to broke was just even server capacity. We had it on 2 dedicated servers and some random hosting company, and support wasn't very good. So we switched everything over to Liquid Web, and they're awesome. And now I think our website sits across 5 different servers. So a couple of them can go down, and it's not that big of a deal. Very redundant now. We hired a really, really technical backend guy to kind of set that all up for us. And yesterday or over the weekend, one of our database servers just died, but nobody noticed because there was another server sitting there, and the Liquid Web swapped it out for a new one, and everything was fine and no issues. So.
That's awesome, man. So when I think about, your business model and like what you have evolved MarketBeat into over the years. Like, I mean, it was banner ad revenue, as you were kind of alluding to. And then what was the name of the American Banking and Marketing News?
Yeah.
Can you explain that story, man? I found that fascinating because maybe you could explain the story and then what you learned out of that experience and how that directed and changed how you were treating the business now.
Yeah. So the hack that I kind of figured out in 2009, 2010, I had American Banking and Market News going. First, I figured out you could like write about the big banks when everybody thought they were going to go bankrupt. Like the question was like, is Citibank going to be here a year from now? Is Bank of America going to be here a year from now? So first we would just write about those big banks every day and get a ton of traffic from Google Finance. That was awesome because like if you get into Google News back at the time, you'd get into Google Finance too. So like the trick was to like put the stock ticker in the title of the article in the first sentence and then somewhere else, and then it would get picked up. So we would write about those, and that went awesome. And then I figured out like you could take some earnings like data that's out there kind of in the wild of this, about companies. So like whenever there's a dividend announcement or an earnings announcement, we could take that information and turn it into kind of like an automated news release and then publish that on the site. So we went from doing 5, 10, 20 articles a day to like 100 overnight because it was all automated and you just kind of copy and paste stuff in, and the software did it. And then you could post to WordPress with this thing called XML RPC and just kind of automate the whole thing. And that worked awesome until we got the site kicked out of Google Finance for being too aggressive with it. But then I got another site to do the same thing. And, we've got more legit over the years, but definitely some growth hacks along the way.
That's super interesting. And it's, it was kind of tied to like when you had found out that website, based on where the traffic was coming from, it was kind of what I was reading when I was kind of looking through it is the risk of the cash and where the revenue is coming from. Yeah. Because before it was just, so you are actually looking at that as a diversification away from just organic, right? So maybe just in general, Matt, kind of think about, or maybe kind of give us your thoughts on how you look at risk and where traffic and revenue is coming from, and how you've taken that thought and put it into your business.
Yeah. So initially, like the business was get website from Google and then get people to click on Google ads, and that was fine, but obviously very dependent on stuff that I can't control. So over the years, I've really tried to build audiences on platforms that aren't owned by any one company. So obviously, email is the main one, but also SMS, even physical mailing lists, push notifications, stuff that's kind of more general platforms and not like Snapchat or TikTok or anything where it's some big company is controlling an algorithm that I'm a slave to. Like I don't want to play that game. Lots of people play that game. Some people make lots of money do it, but as soon as like your interests are no longer aligned, there goes the money, right? So I've really tried to diversify
experience that. Or did you see something happen that was a heightened alert for you?
Oh yeah, the first kind of Google Panda update kicked our butts. Like all the personal finance sites, half the traffic disappeared overnight, and I was like, well, that sucks. But I really wanted to take the kind of the traffic hacks that were working at the time and kind of convert it into something more permanent. And that's kind of how the newsletter launched initially. Was we had some financial data because we were doing the automated content. So we thought we'll just take some of that automated content and mix it with some news content and send out an email every day. That we've got people on I think the email list started like January of 2010. We've got people like that signed up that month that still subscribe and still open email today, which is 13 years into the business. Like where else do you figure out, have signups that are still creating value for you 13 years later?
Dude, that is that is quite the testament, right? I mean, holy buckets. So let's talk about where you're at in Sioux Falls and your passion for entrepreneurship. Because, I'm in Minneapolis and you're in Sioux Falls. We're not in the Bay Area.
Correct.
Right? And so there's a lot of implications that have to do with that. But like, as you've been growing this business, where did you find your community, your resources, how to bounce ideas off of you, like as you were having your journey, and then how are you reciprocating and how are you, turning that into your community now? So
for the first several years, I couldn't find any of it locally. It just didn't exist. So I kind of got into some different online communities. Like the thing that like really opened my eyes to what was possible was the Internet Business Mastery podcast back in the day. Sterling and Jay or whatever their real names are, like those guys like caused me to see the light and like, yes, I should have customers and I should have an email list and I should sell them something. It shouldn't just be banner ads and, whatever else. So those guys, they don't know me, but a lot of credit to those guys. And kind of discovered like Pat Flynn and Tropical MBA and Startups for the Rest of Us and kind of all the podcasts that a lot of people are familiar with, and just, listen to every episode. Like I was part of Tropical MBA community, Dynamite Circle for a while, then kind of got into the Rhodium group, did that. I was in like Ryan Moran's group for a while, different communities of online entrepreneurs. And like, those are my people. So that's kind of who I learned from. And then
what was it like telling people that you lived next to what you did? Because I can only imagine like the disconnect of like the physical businesses and entrepreneurs that you would run into.
Yeah. Nobody got it for a long period of time. A lot of people still don't get it. They just know that MarketBeat makes lots of money and does some cool stuff in Sioux Falls, which is fine. They're not our customers. I don't really care if they understand it or not, but locally, kind of about 10 years ago, I started getting involved different kind of events, and I have a buddy named John Meyer who was kind of leading the effort back then, and got connected to him, and he launched this event called 1 Million Cups. That was a cool thing for a while. Most of them are gone now, but it's like a weekly entrepreneurship event. We did some annual events. 4 or 5 years ago, I started this thing called Startup Sioux Falls, which is kind of an ecosystem organization, because the people that kind of were the ecosystem organization people that like the powers that be in the community had set up just wasn't cutting it, wasn't really creating the impact. And I got under.
What were some of the things missing? Did you see?
There's just no community element to it. So like they had an accelerator facility. There was a little bit of venture capital activity, but there's like no funnel leading into it. Like as I got on their board, and immediately like, we had like flexible office space that we were trying to fill, and like couldn't find people to fill it. And I was like, where's the funnel? Where's the community? Who are we marketing this to? And like, just it wasn't there. So I sought out to create it. So we made like a local Facebook group, did more local events, built an email list, online community kind of stuff, and with in-person touch points, and just some really basic stuff that, any kind of online community builder would get right away. So kind of built all that, and eventually persuaded some of the local startup ecosystem business community leaders, like, yeah, that's probably the right idea. It's working really well. We should do that. So then eventually we merged our organization with theirs, and then we took my name, which starts to follow because it's such an obvious name. And, the building we had was like 40,000 square foot. It's on the edge of town, was not in a good place. So we got our chamber and economic development people to like let us repurpose that building. And we moved into a cool downtown building that the city gave us for $1 a year. And I gave him $1 million to remodel it. Now we have a really cool downtown co-working event space. And inside there's this big meeting room, and it's got a big neon sign. Like MarketBeat's got a neon sign. But there's one that says like MarketBeat Theater, because it's called the MarketBeat Theater.
Yeah, that's awesome.
It's been a lot of fun to just kind of push, entrepreneur ecosystem stuff in my community along for the last 10 years. And definitely hasn't been without headaches, because try to getting non-entrepreneurs to think entrepreneurially can be difficult. And
what are some of the challenges you find with that?
I think one thing that's maybe unique to Sioux Falls, or maybe it's not, but sometimes as a city, we're more concerned that something is happening, and we're less concerned about whether or not it's good. So like, sometimes people just want to check boxes like, oh yeah, we've got a workforce development program. Oh yeah, we've got a startup ecosystem program. We've got a young people in business program. And sometimes people are more concerned about like what it costs and, is it there versus like, are we, what are kind of the outcomes and what are the impacts? I think that's definitely a challenge.
Totally makes sense. When you think about like the resources that you're bringing to these entrepreneurs, because like I think about, it is different, man. Like being up in Minnesota, it's like, and especially like you and I have talked about Rob Walling or, any of the other online entrepreneurs, the nature of the business is you're not stumbling into each other, right? Yep. So when I think about with the resources that you're bringing to these entrepreneurs, like what are some of the things that you're like, when you look back that you're trying to help them get access to or get like certain mindsets? Is there certain things that you're trying to drive that outcome that actually that you were talking about?
The things that really seem to work are kind of the community stuff. Honestly, like doesn't work. Like you can have all these events. People aren't going to start businesses. The stuff that does work is really the accelerator program type stuff, and then venture capital. So we've kind of hooked up with this program called Co-Starters that works really well to kind of get people through their, who's my customer, what's my product, what's my marketing strategy, kind of all the business model canvas type stuff like that. It's been a good program. And then just having money to give to startups to grow. Like we've had a couple of really good success stories out of Sioux Falls because of that. One is an enterprise software company called Prismatic. Yours truly led the seed round for that deal, and now they've gone on to raise like a $9 million Series A that got announced a couple weeks ago. So
that's
like,
awesome.
There's only like 4 companies in the state like right now that are in venture track that have gotten past like Series A funding, and I'm pretty sure I've got capital on 2 of them definitely.
It's just because is there just like an awareness issue too? Probably because like awareness, I should say, from the entrepreneur's perspective of like, hey, this is even an opportunity. Like I can take my idea,
I think
and do something with it.
One thing that I've noticed is there's like a disconnect between our technology community and our startup community. Like the people that like are super into tech aren't super into startups, and the people in startups aren't super into tech. And part of it might be because like there's a lot of big employers around here that'll be happy to pay $100 to $150K a year for a tech guy, and cost of living is low. So if you're making $150K in Sioux Falls, like your life's pretty good. So maybe there's just not that push or that drive to like go level up and be an entrepreneur. Mm-hmm. So we are trying to fix that, but it's hard.
So Matt, when I think about like and we can keep talking about some of the other things you got your fingers into too, but like I think about like so many of the successful entrepreneurs that I stumble across, it's like the business is their identity. And then as they get outside of that, they kind of don't really know how to find hobbies or where to get involved and like how to separate themselves from their business. And it's kind of all just swirled together. How have you handled that concept?
I've had a few friends locally that have sold their businesses and really struggled with identity stuff afterwards. And, that's kind of led me to think, well, maybe I shouldn't sell my business because for these 3 guys, it's not going super hot. And I like doing my business, so maybe I should never sell the business because the business is the platform that lets me do all the other things. And if I sell it, like, is that platform still there?
What's your definition of platform in this context? Because I like where you're going with this.
Well, so for MarketBeat, for me, like, one, I run a successful business in town, so like you kind of have the business leader identity. Also makes a bunch of money, which is great because that lets me fund different things.
Check.
And,
yeah.
I can leverage kind of leverage our team. Like the Startup Sioux Falls website was built by MarketBeat team members. So you can use your team members can borrow some of their time to do side projects. And, if I didn't have the team, I couldn't do as much of that stuff for the community. So.
I appreciate you giving that clarity because I think that's one of the things that I did not anticipate after we had sold too. Like, I was talking to someone recently and I was like, do you have a reason to go talk to people? Mm-hmm. Like, if you don't have your company, will you even have the reason to participate in that conversation? He's mm-hmm. like, you're right. I won't. Like, it doesn't matter how much money you have. Like, what's the purpose? Yeah. So how have you started to or what was the process for you to start to entertain these other passions and hobbies?
Yeah. So MarketBeat has never been like this most time consuming business in the world. Like if I buckle down, I could probably do my job in 30 hours a week. So there's always been the time there to do it. So that's kind of led me to fill my time with other stuff because, I don't want to get bored and I don't want to play video games all the time. And, kids are at school now, so they don't really need me during the day. So I've always wanted to do lots of different things at once. And, for a while, I kind of recognized that doing other things was a distraction and cost me money. Like I had a buddy that had like a golf website and I was helping him out and owned part of the company. And like, this thing makes like $200,000 a year. Like, why am I putting time into this? So for a while, it was definitely cut to focus on MarketBeat. But, now better opportunities have shown up. Like launched a venture capital fund about a year ago. Got a cool partner in it who really knows what he's doing. But it doesn't take a ton of time. It takes some time, but not a ton of time. So definitely better. Business is mature, definitely, but it's created time to do some other fun opportunities where, I can make some money, but also like really learn a new industry, like real estate and VC. And that's been a lot of fun just as an educational experience and also hoping to make some money too.
Have you ever found yourself spread too thin while you've been doing this?
Yeah, it comes and goes in seasons. Really, the times that I get spread too thin are when I say yes to too many of other people's things. So, if you're anybody that's successful in a smaller community, like your DMs and your email gets lit up by people looking for advice and coffee meetings and lunch, and even on Twitter, just people that want something. You get a lot of that, and it's fine, and I totally understand it. People want to learn from people who are successful. But you really have to manage that, understand like you can't be everything to everybody, and if you try, you're going to make yourself miserable and not focus on your stuff. So there's definitely a place for it, but I've definitely kind of scaled back on how many DMs I respond to and how many people I get back to and how many people I'm willing to meet with on a monthly basis. Just to, I want to kind of have a sustainable pace of life and don't want to get burned out doing too many things.
Is there any suggestions that you have for yours truly who sucks at that filter?
Yeah.
Like because that is easily one of my biggest weaknesses, Matt. And I like, how do you judge and what is the process? Do you listen to your gut? Do you just go till you're breaking, or is like, what's the process there?
Yeah, it's good to have some filters. And kind of the most helpful thing for me in the last couple of years, I've got an employee named Will who works for me. It's, older than me and wiser. And he just said, if you're not going to meet with them anyway, are you really doing yourself a favor by spending an hour writing them an email saying, no, you're not going to meet with them? You just not respond to the email. So I think if you're getting, 20-ish DMs or tweets or emails or whatever a day, like you just got to give yourself permission to like not respond to people. And, and the other thing that I think of is, I think of like, who are the top 5 business community people the top 5 business leaders in my community. And like, if I emailed them, would I expect a response in 24 hours? Like, no, probably not. Or would I expect a response at all? Maybe not. So like, if I wouldn't expect that from them, I shouldn't have to do that either for others. So that's been helpful for me. There's definitely filters. Like if I meet somebody in person, much more likely to like say yes to meet with them. If it's somebody that I don't know and don't know people that know them, or even if they're like in town, like, I tend not to take those meetings as much because often I don't want to say it. Sometimes they end up being weirdos, but sometimes they end up being weirdos. And
who ask for something more when they're in person with you.
Yeah. And it's not even about the ask. It's just sometimes like strange people get attracted to successful people, and just kind of want to keep my distance from some of that. So it is, it gets hard to make new friends because you don't know what motives people have when they show up. So you kind of got to meet people in certain contexts where they probably don't want anything from you. And yeah, it's something to manage. I don't monitor my own schedule anymore. So like if I want to meet with somebody, I will tell them, hey, Ryan, Maureen's going to follow up with you and she'll find us a time to meet. And if Maureen's in charge of my schedule, she won't overbook me in a way that I'll overbook me. She knows that the limit is like 12 meetings a week. So like after 12, she just pushes it back to the next week, and is really good at protecting my time in a way that I'm not. So
that's awesome, man. I those gatekeepers they protect ourselves. I totally agree with that. And I'm curious, Matt, especially with your personal finance passion and what you do, and coming from a very humble background. Did you struggle with imposter syndrome? And I know that's way overused, but I'm just going to use it for the definition of it is. And then as you've achieved, and I don't know if you are, but I can imagine with some of the numbers, you're financially free and how you've processed that.
Yeah. I remember when I first got started before I was kind of full-time, like definitely dealt with it. Like I would not call myself an entrepreneur for a long time. I was I thought of myself as a web developer that had a side gig that worked out pretty well. And then I went full time and really had to, think about how I wanted to think of myself. And, now, I know what my tax return says every year, and I know it's a number that almost nobody else says. So it's like, it's hard to see any or imposter syndrome now, just because the numbers are so obvious that yeah, got there, been there, done that, got the t-shirt in ways that others haven't. So definitely it was a thing at starting, but now it's not part of the equation.
What is it? What's it for? What's it all for then in your mind?
What's the purpose?
With the money, with the dollars and the wealth, and like, what do you want to do with it? Like, what would be the impact that if we were to say, hey, we're sitting here and it's 20 years from now, and Matt gets to say, hey, we did these things that would bring you a big smile to your face. What's it for?
Well, I mean, for me, I'm like past like the point of like lifestyle creep. We live in a 3,000 square foot house and next to a school, and we're not moving. So like that's, and I don't have any more room in my garage for cars or anything fun. So like I've got one Lamborghini and it's a fun car, but like I'm not going to buy another one. So like we're at peak lifestyle. So any money beyond like where I'm at today is, one, partially keeping score, but two, it's resources that let me do more kind of fun stuff for the benefit of others. So like I'm part of a small church. I want to help them kind of build a facility that they own someday. Would love to do that. Start Sioux Falls is a big project. There's like a local kids science museum that we have. Like next month, we're going to announce that we're going to redo. Like they've got it's like 3 floors and they're like different themes, and one of them's a space floor, but it's like 20 years out of date. So we're giving a bunch of money to like modernize it and
awesome.
Not talk about the commercial crew program as if it's something that's far out. So that's going to be fun. But I like doing projects, and they don't have to be like for my benefit. Like I want to find opportunities in the community I live in to do cool stuff. Like I would love for there to be a Sioux Falls aquarium. Like you can't see it here, but I've got a 500-gallon fish tank in my office.
Nice.
Yeah, like saltwater, live coral, everything is like, I think Sioux Falls should have a full aquarium, and we don't have one yet. And there's a group working on it, but I don't know if they've got it. What they need to get it done. You need probably like $20 million to get that done, and I don't have $20 million to do that right now. But maybe someday I will. So
that sounds like a pretty good use of $20 million. That'd be awesome.
So maybe somebody will beat me to it, but I would love for that to exist at some point.
Well, did your exposure and your passion for personal finance, has that kept you grounded along this way? And maybe you're just such a damn nice person, man. I don't know if that, because the reason I'm just trying to peel this apart, because it's like, you and I both know there's circles that we run into, man. Like,
oh yeah,
this stuff can go like off the charts. And I just got done reading the Psychology of Money book, Matt. Have you read that yet?
I have. I don't know if you're coming.
I swear I wouldn't read it because I've read hundreds of finance books. And I'm like, I don't know what's another take on this. And it was just the psychology. It was so much about the psychology of it. And so I'm trying to understand, like, as people, like, just no matter how much they have, it's never enough.
Yeah. Well, I think that, but there are also people who just like let it get to their head and think I'm such a big shot and, too good for everyone else. And, I've kind of set up my life up in such a way where it's kind of hard for me to get ungrounded like that. Cause, we send our kids to public school. We live in a normal neighborhood. We live in a small town. We're part of a church. And if I'm talking a whole bunch of shit at people in public where, it kind of gets out there, like, somebody at my church is going to be like, what the heck are you doing, Matt? And, so, it's always tempting to be like the big swinging business guy in town making a bunch of money, but I've really tried to avoid that.
Desire.
Yeah. I don't know. I just really tried to avoid that because, I think there are some business people in town, like, who have made a lot of money, but are also like total assholes and nobody likes them. And like, I don't want to be that guy.
Right. It's so when you were in ministry school, right?
Yeah. I finished. So, I got the degree.
Did you really?
Yeah.
So I was a theology minor, Matt. Okay. I don't know if you ever knew that. So it's super fascinating to hear, like, how did that, so first of all, why, what was your intent to go? And then like, what was it like essentially becoming like a very wealthy individual talking about money when you were going through ministry? I love the combo.
Yeah. The main reason that I went was I wanted to learn more about church history and theology in a way that I couldn't really get through church Bible studies. So I never really intended to go into ministry full time. But I had a buddy named Nate who worked at seminary, and like they had this class for kind of lay leaders in the community called Discipleship Sioux Falls, and I went to that. I was like, this is fun. I want to do more of that. And I knew, like, if I'm ever going to go to grad school, it's probably going to happen before I have kids. And, the opportunity was that, or like the MBA program at another school in town. And it kind of sounded more fun. So I did that. And 3 years later, graduated with a 64 credit hour seminary degree. And it was a lot of fun. It's a great experience for the right person. It's a really good use of time.
When you think about your online business and how you built the business and the topic, and so I'm kind of curious. I'm trying to think of how to articulate this question. Is like there's the business that you have mechanically, right? Like from the subscriptions to the advertisement to all this stuff, and it could be about any topic technically, And then but you've got personal finance. I'm curious, like, is there a saturation point or certain topics for this kind of business that you have? And like, have you ever thought about other topics that are outside of personal finance where you could just rinse and repeat your business model?
Well, I mean, there's 60 to 70 million people in the United States that own individual stock. I kind of consider that our total addressable market. And I've got 3.4 million of them on an email list. So we're maybe 5% of the way there. So I think there's plenty of room to grow. Like, I'm aware of like 1 or 2 10 million person email addresses in the investing space. There's a big company called Agora that's got that many, and another one called MarketWise that probably has that many. So, we could have 3 times the number of email subscribers we do today at some point and make 100 million a year or more. And I think nobody would be too sad about that.
It's and how when you're with I just continue to go back to that person that's been opening up your emails for 13 years. What is some of your approach towards providing that kind of value and making sure that what you ship every day is going to be value? How do you guys keep that quality control?
Yeah, so we have a team of about 15 freelance writers that write for MarketBeat. We have 2.5 editors that edit the content, make sure it's good. I think maybe the thing that kind of keeps people coming back, especially the people that have been subscribed for a long time, is, we publish the newsletter every day, like we never miss it, and the format's pretty consistent. So if you kind of just make the habit of it and you stay in the habit of it, you look for certain things in the newsletter and you always want to see it. It kind of becomes I would say a morning paper. It just becomes part of the routine, and people like it and it's going to stick with it.
Is there any, as you've been growing the businesses, were there any major challenges that made you second guess that, like, hey, outside of the family stuff, like, hey, is this worth it? With the changes or any, like, from the software, not the software, but like the kind of the mechanics of it.
Probably not in the last 5 years. The industry has definitely changed, but I know all the advertisers we work with and kind of understand their businesses, and I really kind of feel like if I'm the best in the world at anything, it's probably like generating demand for financial information products. And I don't know anything else that I would do nearly this well. So I think I'm the best at it. So I want to stick with it because I can't think of any other way to make more money than I'm making today. So just going to keep doing that.
That's a good problem to have, my friend. So as it relates to your team, like, what was it like scaling up the team that fast? I mean, how did you select your team? How you create a culture with a team that you pretty much 14 people is an intimate group, but also you grew it pretty fast.
Yeah, I got really lucky. First employee was a friend of a friend. Second employee was somebody I met at a co-working space. Third employee was just a guy I knew online forever. And then that was kind of up until 2019 or 2018 and started to scale. I'm like, I need some more people. So thankfully I was pretty involved in kind of the small business startup community at that point. And I knew a guy named Will who had a business going and was venture funded, but not going well, but I knew he was super smart. So I thought, hey, I know you guys are going to shut down, or maybe you need to get acqui-hired. So how about you guys, like you and the other developer that worked for him, like, how about you guys come work for me and I'll pay you what you're making now. So that worked out really well. And since then, like, Will has helped kind of build the team. He's just done an excellent job with that. And we hired a CFO about 1.5 years ago, and she's been great. And, our kind of strategy is just to be really bad at something until we decide we're going to be the best at it. So hired a CFO, got the books together, did a full audit, did another full audit, and like now we're really good at the books. So when we decide to be good at something, then we get good at it.
That's awesome, man. And you're now also getting into a bunch of real estate. So are you leveraging your team right now for the real estate stuff too? And like, what's your intent with the real estate?
So typically when somebody like me wants to invest in real estate, you run into all sorts of syndicators, people that, have a deal and they're looking for money and then they want to do some kind of preferred return and split on top of that. I always kind of felt like that's a little bit of a sucker's game because, it's all my money and they're making money off of it. I ran into a guy. His name is Kevin Tooby. His claim to fame is he owns or still owns like 1,300 Verizon stores across the country, and he had a couple private equity exits. So he did really well, probably worth, let's say, a couple $100 million. And he decided that after he got out of doing the Verizon stores, at least as an operator, he wanted to run his own family office because he thought it would be fun. And he started developing real estate, and our mutual friend said, "Hey, you two both make a lot of money. You're both really smart. You guys should talk to each other." So we had lunch, and that led to another lunch. And he's like, "Hey, I'm doing an apartment project. You want to buy 10% of it?" And it's like, "What are the fees?" And he's like, "There's no fees here, GP." And I was like, "Oh, that sounds really interesting." And now here we are, like 30 projects later, at least probably 20 million in equity, at least in my part on the deals. And
you guys, how many doors did I see? I mean, it's going to be a bunch when it's done, right?
Yeah. Once everything, so 2020, 21, like interest rates, you could finance an apartment project at 3.5%. We knew that this is not going to stick around forever. So we figured that out, and we're going to start as many projects at 3.5% as we can and just go hard and fast. And it's kind of what we did. And now I think when everything's done, we have about 2,000 units that we share. And then we have 10 Starbucks buildings and just a bunch of different random strip malls, that kind of stuff spread around town, and then a few other places as well.
And when you guys are with your Sioux Falls, the local filter of everything that you're doing, are you applying that with the real estate too? Because I mean, I for some reason, Matt, every time I see the things that you're doing, it just screams conscious capitalism. I mean, you have very intentional with everything you're doing. It's not like things are just going off all over the place just for the growth. I mean, you're so is it locally? I mean, what's kind of the spin to it?
Yeah, I mean, there's always kind of the invest in your hometown element. That's fun to drive by a building and I own part of that. And there's definitely an element of investing in my community, but also the returns are really good because you get tax benefits and you're paying off debt, and there's you're getting income on it. So the returns are better than what you get in the stock market. So where else can you obviously rates have gone up, and no new projects make sense right now, but 2-3 years ago when we were starting stuff, best returns, tax benefits, invest locally. And the other thing about Sioux Falls that maybe some people don't know is the developers basically run the town. So if you want to be one of the people that run the town, you probably become a developer. So I wanted to be part of that game.
I love it. So I don't know if you want to go here or not, Matt, but I've been following a lot. I'm a junkie for macroeconomics and monetary policy and stuff like that. And I just think about what's been going on over the last few weeks with Silicon Valley Bank and Signature. By the way, I had the founder of Signature Bank on my show in 2020. I know. I don't think that aged well. Let's just put it that way.
You should call him up and see if he wants to be on the show again.
No shit,
hey,
man.
I heard you sold your business to the FDIC for $1. How's that going?
Yeah,
what are you doing now?
How was that exit? Right. Yeah. Let's talk about your legacy, man. Yeah. Oh, I actually didn't even know it was a signal. Well, it didn't click. So I was like, hey, I had this banker on. I should have him back on the show to talk about what's going on. And then I was like, okay. I don't think he's probably taking press interviews right now.
Yeah,
but
probably not.
With your personal finance and just your because I know you had released some material too about kind of what was going on. What's your thoughts, man? As far as how they're handling the overall fix of this and how that is different from the investor VC world, because you're really have a foot in both, because you're in the VC world but you're in Sioux Falls and you're not in the Bay Area, and so kind of just I don't know, like I said, we don't have to go here too much, but I'm just kind of curious on some of your thoughts or where people should be paying attention to.
Well, it kind of feels like the Federal Reserve was raising interest rates as fast as they could until something broke, and then something broke. I think the underlying issue, though, is, there's every bank in the country still has losses from long-term treasuries that is not all of a sudden fixed by kind of the short-term things they've done. And as they continue to raise rates, those losses are just going to increase. So the problem, they stem the chaos and the panic from happening short-term, but the long-term underlying issues are still underlying issues. like banks across the country have moved kind of their long-term treasuries from like their available for sale bucket to their hold to maturity bucket. So that way they don't have to mark down the losses. Or like they say, oh yeah, this is a 10-year treasury note. We're going to hold it until it matures 10 years from now. And like, well, theoretically that could be true, but if a whole bunch of people take money out of your bank, then you got to sell them at a loss and then you're fucked.
I know, dude. And I sit here, Matt. I mean, it's like what, 682 billion of unrealized losses. And that's without another 1/4% right? Which is just going to immediately, sink them even further. And I was looking at the mortgage market, Matt, and I'm like, what seriously, like, what's the plan here? And I just find it fascinating where, like, is this how do you see the rates and the stuff like impacting the startup space that you're playing in Sioux Falls or your ecosystem compared to maybe some other people?
For a while, like a year ago, everybody expected deals to be less competitive and pricing to go down in startups. And at least in the seed stage, it really didn't. Like in the later stage, prices kind of corrected. But in terms of the seed and Series A, like the correction never really happened. And now it's kind of finally happening where there's always like a delay from like the public markets kind of correct first, and then it's the late stage private. And now it's kind of finally hitting, 12, 18 months into this kind of slowdown. It's finally hitting the seed stage stuff. So like there was a couple guys just getting started that doing technology business locally. And, 2 years ago, that deal would have easily been like a $3 to $5 million deal. They gave us 10% of their company for $150,000, which like that hasn't happened in like eight years.
Yeah,
maybe.
It's been a long time.
But there's the correction is finally hitting kind of the early stage space. So I think prices are going to get more reasonable back to maybe what they should be now that, zero interest rates are over and will probably be over for a while.
Dude, I cannot like how this is all going to shake out with the private equity market because it's just sitting over there. All the same rules are applying to them, right? As commercial real estate, as the banks, and they just have this huge curtain over them because they don't have to publicly release anything. And I'm sitting here going, I don't know, man. I'm going to be very intrigued to see how the IRR is going to be delivered to their investors when the time comes.
Yeah, I think the longer that rates stay higher, like is more and more is like even if the rates stay what they are now, like the longer that the rates stay at this number, we're right now 4.5% or whatever. Like more people are going to be caught with their pants down because usually on like business debt, it's max like 7 years of like people lock their rate for. So that stuff kind of turns over, and you got to refinance it. A deal like a real estate deal that made sense at 3.5% is not going to make sense when you got to pay 7% on your money. And then people.
I was watching. There was a guy I follow, and he published his. Like a note from his REIT that he is invested in. They were talking about the underwriting, Matt, and it was like if it doesn't make any sense underneath 7.5%, like at all mathematically. Excuse me. Yeah, very fascinating. Do you think, like, I'm curious from someone that's I have no idea what your cash position is on anything, obviously, but I'm curious of like, what is your intentions as you're starting to see things pop up over the next couple years? You're going to be drooling or what?
Well, right now, I think I'm probably like 25% in cash. I just haven't, real estate stuff slowed down. The VC stuff is kind of slowing down. I dollar cost averaging the stock market, keep doing that. But I haven't really found anything that just screams deal. So money's sitting in money market account making its 4.55%, and it's gonna do that until the right opportunity comes, and MarketBeat still.
Well, think about that. You get 25% cash and it's 4.5%. Like that's what everybody's competing with. Like, I mean, I was talking to a buddy that's in commercial real estate, and he was telling me that they sold a building for $35 million at a 3.8 cap rate 2 years ago. I'm just like, for God's sakes. Oh, it's
ultimately I think it's going to be good though, because stuff got financed that never made sense. Business, private equity and real estate. So fact that there's like a normal interest rate now is going to force people to invest in, be more, smarter about their investing, and ultimately that'll be good for the economy long term.
Matt, I'll tell you what, man, like I appreciate the conversation. You're just so level headed, and it's It's just fun. It's fun to talk to people that like it. Just you have the priorities in a way that is it's aspirational, man.
Yeah.
I appreciate it very much. And when you think about the listeners, I mean, well, I only got a couple questions I usually wrap up with, and the first one is I love the word intentional for all the right reasons. The name of the show. I'm curious on your definition of what that means to you. That word.
Yeah, for me, intentionality is like thinking like, what are the directions that you want to go in life? Like, you want to be in a direction of being a good father. I want to go in a direction of being a venture capitalist. Want to go in a direction of helping out my church. And like, the goals and day-to-day tasks are less important than like the big life filters and directions you want to go to. And, I try to run everything through those kind of filters. And if that meets the filter, like, it's a yes. And if it's not, it's a no. And that's been a really good way for me to order my life.
That's fantastic, man. Curious on the clarifying question is how do you course correct, and how do you figure out that if you're off track, and how do you course correct?
I think it's really, for me, it's not hard, because if I'm not enjoying something, then it's probably shouldn't be doing it. And like the directions I have in life, like I love being a father. I love my business. I love volunteering, and like if it's not fun, then it's probably not in alignment with those things.
I love it, man. And then the last question is an easy one for you: is what's the best place to keep in touch or to reach out? And the listener should also note the 20 DMs that we've already discussed, right?
Yeah.
So what's the best place to find you, Matt?
Yeah. Check me out, mattpaulson.com, mattpaulson.com. I post a quarterly update as to like what I'm working on. If you want to follow it, you can sign up there's an email list there if you want to get them emailed to you as well. So check that out.
Matt, much appreciation on behalf of myself and the listeners for your time, man. I can't thank you enough.
Yeah, great chatting with you, Ryan.